September 25th, 2024. You can see we gapped up, or we didn't gap up today. There was actually, that's pretty rare. There's actually no gap today. And we got bull bar, and you can see it tested the exact all-time high and went one tick above it. So we're breaking out of the all-time high today, or on the current couple of bars, we're trying to break out of the all-time high. So usually when you test something as important as the all-time high, you don't go straight through it. We might have to test 5,800, but even if we do, let's pretend today's a big bull trend day, right? Let's pretend, we get to 5,850 or something today. Probably what will happen over the course of the next couple of days is we'll come back down to this area. You can see on the daily chart, this gap isn't real because it's a rollover. So I gotta get better about just using the current contract, but I just get really lazy with it, unfortunately. So you can see we're bullish, yes, but possibly one pullback, two pullback, three. So maybe we're forming some sort of parabolic wedge up here. So we have to keep that in mind. And on the hourly chart, getting a really large breakout, but again, a wedge, one, two, three. So possibly a wedge up here. Oops. Possibly a wedge, one, two, three. Maybe we're trying to get a breakout above a larger wedge, one, two, three, or one, two, three. But what's important here is that we're breaking out of the all-time high. That's, I think, really what the main focus is. We've already broken above the Globex high, I believe. Oops. Yes, we've broken far above the Globex high. Okay, so on the open here, we had, well, first off, yesterday was a bull surprise, bar 78. Really fascinating that we were opening exactly at yesterday's close. That's really pretty rare. I don't think it happens all that often, maybe a couple times a year. I'm not even sure the last time I saw that exact pattern, but it's a possible wedge with bar 62 yesterday, bar 78, and bar 1 today. You can see bulls are hoping that this is the start of a big bull trend and that we're going to rally all day. Bears are hoping that it's a bull trap, bar 1, and that we're going to get, basically disappointing follow through on bar 2, and that this is a possible high of the day. I think if 2 closes on its low, it is a credible sell for a possible high of the day. I'm not going to take it because, I don't usually trade the first 6 bars of the day unless there's a special situation. And, a special situation I came across like maybe a month ago of an OO pattern on the open, which I just thought was pretty unusual. And I was pretty sure of the context, so I took the trade. And ever since then, I've been pretty undisciplined over the course of the first 6 bars. So I'm just not going to trade the first 6 bars today. And I'm just going to wait patiently for a possible opening swing. So bears could argue it's a low 2. They could argue it's a big low 2. They could argue this somewhere in here is a low 1. Maybe that's a low 1. And then this is the pullback from the low 1 and then a second leg up, and that this is a big low 2. Or you could just argue it's a low 1 here and a low 2 short here. But it's hard to sell the low 2 after big bull surprise, big bull surprise. So it's a swing trade if you're going to sell it, and it's only if it closes on its low. But it is a credible high of the day, and I think the context is pretty reasonable for it to be the high of the day. So that's not really worth selling. The bulls see a high 1, so, well, I suppose, yeah, a high 1, because you're getting a breakout above on bar 1. So we're at a new high, and this is an inside bar, a high 1. But do you really want to buy above bar 1? Maybe only like 30% chance it leads to a big bull trend. It's probably not all that great. They have all sorts of examples of, one second. Let's pull up this file. But, 1 in 3 chance that it's the high of the day or the low of the day. And basically a lot of them, I think they're 1 in 3, but I usually only record the ones that work, so it's kind of skewed. But this is fair, 30% chance. I don't know if this is a 30% chance that it's high. I think it's probably reasonable. They'll break it above yesterday's high. Yeah, maybe. Making slides is really important. I think six. Fair to think that here maybe 30 to 40% chance. This is probably as good, if not a little better than this. So part two, it's a possible low to be short for the Bears, and they're hoping for a swing down. And for the Bulls, it's a disappointing bar in their bull trend. So Bulls might exit below two. Do you have to exit below two? Probably not. We're probably always in long still, but it's very likely that it's trading range always in long. This is not a strong bull trend. So what if three closes on its low? You can see, in theory, if you bought the close of one and scaled in, those traders are exiting during bar three around the close of bar one because it's obviously a disappointing follow through bar. So where are we going to test to? Well, the bar 80 low is support. Remember, something that's really important about trading ranges is the higher lows in trading ranges become support. So this is going to be support. This is a buy climax, and the buy climax low is support. This is also a buy climax. So this buy climax low is support, and the moving average is support. So even if three closes on its low, you'd be selling a big bar with big risk on support. Not as great as it could be. So I think probably going to be a disappointing close on bar three, and B, if it is a disappointing close, or if it's not a disappointing close, I think the next bar will be probably a bull bar. So I really doubt the Bears are going to get a good looking follow through here. Because to me, this is probably a bit more of a trading range than a bear trend. We do have a couple open gaps from yesterday. This is a gap. This is a gap. But I'm not overly convinced that we're going to go close those. And my end goal with these kind of videos, I suppose, is to just show people it's possible. It's really hard to become a day trader, but I mean you can do it. Anyone can do it. You just have to put in a lot of work. And so, you know, eventually when I'm doing very very well day trading, I want to keep posting these videos about and keep posting the live trading videos and have these for people to look back on. These kinds of videos that'll be years old at that point, or a year or two old, most likely at that point. And people can look back and just see the progression of becoming a day trader. I mean, I've showed these documents before, but let me just pull something up. This is one of my favorite documents to show. That one. I used to make. On it's loading. It's pretty long. I don't remember how long this one is. 191 pages. I have a bunch of these that are a couple hundred pages. I probably have like 2,000, or not 2,000, but I don't know, including stuff I believe I probably have 2,000 pages of notes on the whole stock market. But this is my daily reviews that I make now that are 20 minutes. Well, now, like recently, they've been like 20 to 30 minutes. But realistically, I could easily talk about the stock market for an hour every single day if I wanted to. It's just a little bit mentally taxing to continuously do that. But I could probably talk about the stock market for 2 or 3 hours every day if I really wanted to make a really in depth review, which I've considered doing just like every once in a while. I could probably talk about the stock market for 2 or 3 hours, but this is 2018, or these are the days I'm writing through in 2018. I started trading Al Brooks in 2019, but these are 2018 days that I was going through. This is every possible thing I had to say about the day. Is this little paragraph right here? That's everything. Uh, November 19th, 2018. This is everything I could write about this day. This is everything I could figure out. And that's, you know, that was probably about 5 years ago, 4.5 years ago, I'd say, that I wrote this stuff. And that's everything I could figure out about the day. And now I can make really in-depth, really long reviews on the market. So it just takes time, but you can do it. You just have to be really, really persistent with it. You can see we ended up finding support around this low. Like I mentioned, this is a buy climax. So just mental note, every time in a trading range you get a buy climax or a sell climax, the sell climax high is going to be, especially at the tops of trading ranges and the bottoms of trading ranges. So like, this is probably going to be resistance because it's sell climax and it's the high of the possible trading range. So if you're selling at a sell climax near the high of the trading range, then it's probably resistance. If you want to buy, near a buy climax low in the bottoms of trading ranges because it's probably going to be support. And yeah, you might have to use a wide stop and scale in sometimes, but those just general rules of thumb. Buy climax lows in trading ranges and sell climax highs in trading ranges are always going to be possible support and resistance. So you can see buyers at the moving average and around the bar 80 low. Bar 4, probably not going to do anything, even if it's a bull bar closing on its high. If it is a bull bar closing on its high, it would be a double bottom, micro double bottom, I suppose, 3, 4, and bigger double bottom, lower low double bottom up here. What if it's an inside bear bar closing near its low? Well, that would be a low one short for the bears. So they're hoping that the high of the day is the bar one high and that the bar two low, or the bar two is a possible swing sell, and they want to swing down. But if 4 closes on its low, it's a double top. You could argue 2 and 4 or 1 and 4, and the neckline is the 3 low. So they're looking for a breakout below and a measured move down. Theoretically based on the height. This is the most aggressive measured move. The least aggressive measured move is always the bodies, and the most aggressive measured move is always, using the tails and the measured move down. So I assume we got some sort of leg one, leg two in here. If you use the least aggressive measured move, we'll see if it's that. Okay, not quite, but close. I'm not sure there's going to be an exact one. Sometimes there isn't, which is fine. Yeah, but sometimes it'll be like just the top. Obviously, it's really hard. You're not going to pick this out in real time, but these are the middle as far as aggression goes. Okay, so this is if you use the open of bar 78 to the high of bar 78, and then the low of bar 80 to the high of bar 1, that would be the leg 1, leg 2 measured move. But again, it's hard to pick that out real time, but you can always see them looking back, and it gives you a general idea because the leg 1, leg 2 is always going to be either the low to the high, or the body plus the bottom tail, or the body plus the top tail. It's always going to be something along those lines. If you just go through and just try to pick out all the measured moves, again, eventually you'll get pretty good at it. I doubt. No, this isn't. Never mind. It's not a big enough move yet. But in theory, if we went up, something like that might be possible. So it's possible that if we go up, we'll see a leg 2 measured move up there. So 3 straight bear bars, bar 4, bear bar closing near its low. Still a tail on bottom of bar 4, so not great, but 3 straight bear bars, so sellers above bar 4. Are we always in short? Maybe, but you probably need one more bar, but it's more confusing, more so than anything. So I'm not too convinced of anything. If bar 5 is a bear bar closing near its low, could you sell it? You could sell it for a second leg down, but it might be a bit parabolic. Back in like 5-10 minutes. Bar 5 is a bull bar. but it's not quite closing on its high. It's not really all that good. Theoretically, it's a double bottom, 3 low, 5 low, and the neckline, I suppose, would be the 3 high, and traders want a measured move up. So it would basically just be a measured move up of the bar 3 high. And, that, maybe a 40% chance it happens. It's not really all that great math. If you're buying, you're risking 6 points trying to make, 9 points with a 40% probability. So that's a losing trade. After 3 straight bear bars, 2, 3, 4, probably a second leg sideways to down. You can see we're getting higher lows, 3, 5. I suppose you could even go back to 78, and we're getting lower highs. So it's a triangle, it's breakout mode. So not much to do. Rather better to just wait. We did get a surprise on bar 7 yesterday, so I would not be surprised if today or at some point later in the week we get another surprise on bar 7. So that's something to keep an eye on. So what if 6 closes on its high and it's good follow through? Well, that would increase the chances that we're going to get a bounce. But if you're buying, if bar 6 closes on its high, basically asking you to buy probably in the upper third of what's most likely a trading range. So I don't really want to buy in this area. I'd rather buy higher or buy a reversal up from lower. So 6, looking below. This bar might be big. It's moving in a way that it might get, it might be a chaotic bar or emotional bar, I suppose. Um, Usually, if you're going to get a big move on bar 7, it'll do, there'll be a big-ish move, a couple of points for sure in the first like 20 seconds of the bar. So 6, a bull bar, but again, not quite closing on its high. Consecutive bull bars 5, 6. I'm not really sure we went always in short in here, but we are always in long. So I suppose we're back to always in long. So always in long bulls could buy above bar 6, probably stop below 78 yesterday. I don't know if I'd put a stop below 3. There's probably more buyers than sellers below 3, but there's also probably more buyers than sellers below 78 yesterday. So it's tough. It's not really great to be long. Bear bar closing near its low would be a double top. You could argue 1 and 7, or you could say 2 and 7. Either way, I suppose 2 and 7 uh, makes sense, but they want to break below the neckline and measure move down. Maybe a more conservative one would be there. Again, low probability. So if seven's a bull bar closing near its high, it would be three consecutive bull bars, increased chances of some sort of measure move up, but not really all that ideal. So bar seven, a bull bar, but a tail on the top and a tail on the bottom. The bulls see follow through. So the bulls who bought above bar five are thinking that seven is follow through and that they're possibly getting the start of a bull trend. So the bulls are hoping the double bottom 3-5 is the start of a bull trend. However, when you get a bull trend, it usually looks a little bit better than that. Let's say eight is a bull bar closing near its high. It's going to be tough to want to buy because we have wedge one, two, and three. Two could be an overshoot. The wedge could be here, or it could be all the way up here. Either way, if seven's a bull bar closing near its high, I'm more worried about a wedge than anything. So eight, a breakout above the bar one high, but I'm seeing a wedge. Like I mentioned. So what if eight closes on its low? Do you sell it? No, I wouldn't. We haven't gone below the moving average yet today, so that makes me kind of resistant to wanting to sell that. For a swing, it's probably okay. Even if it closes on its high, I'm still too concerned with the wedge to buy. Might be a breakout, so bulls are hoping it's first leg up, and now we're going to get a second leg. But to me, it kind of looks like a third leg, and it's not strong enough. The thing that you're thinking about, or you should be thinking about, I think at least, is the market cycle. The market cycle is always really important. So you have to be wondering if this breakout is strong enough to reset the market cycle and get its own two legs up, or if it's probably more of just a third leg up in a probable trading range. I think this will reset the market cycle. This probably won't, and this is weaker than that. So probably going to be some sort of doji. Bulls really would like a bull close here. Either way, I think if it's a bull close, there's going to be buyers below eight, but it's a third leg up, so it's not great to buy below it because it's still a wedge. So bulls will hesitate. If you're going to buy below bars, you want to be buying below first legs. Or if it's not below first legs, you want to be buying below, this whole thing is a micro channel. It's a 10, 11 bar micro channel. So there's obviously going to be buyers below 25. It's an easy limit order trade. There was a couple on this day, 40, 45 is a perfect example. You have a wedge down 1, 2, 3, and traders are going to buy below 45. It's a reasonable buy. So still a wedge. What if 9 is a massive bull bar? Probably would reset the market cycle, but it's too climactic for me. Again, we're in a resistance area, right? We're at the all-time high. We just tested it again for the second time on bar 8, and there were some sellers. So what if 8 is bear bar closing near its low? It's still a wedge. And, your signal bar, or sorry, 9, I meant not 8. But either way, it's a wedge. It's 3 pushes up. So what does that mean, right? Well, if it's 3 legs up, expect 2 legs down. So, I'm not expecting a major reversal out of this. This is going to be a minor reversal. Some traders would argue, let's pretend that we get the trend line break. So you could draw it like this. You could theoretically draw it like this, but I think it's probably more like this. We're going to get 2 legs sideways to down. And then let's say we get our 2 legs sideways down. That could be a trend line break, and then we get a pullback and some sort of lower high or higher high major trend reversal. That would be possible. So there was your wedge, bar 8. But is that a good first leg down? No, I mean you don't really want to take that short. So the bulls who were buying below this, they're probably scaling in, and they're doing so for a scalp. There's probably sellers above 9. The bulls are hoping this is a bull trend, right? And they see the wedge. Everyone sees the wedge, but they want a breakout above the wedge, so they want a measured move up somewhere up here. That's the most conservative estimate, and the most aggressive one would be somewhere up here. Bar 10 so far, an inside bull bar, even if it closes on its high, probably not worth buying. Again, you need to buy here. We're going to need something that's a clear breakout, maybe an open gap with the bar 8 high. So let's say 10 and 11 are strong consecutive bull bars. it's reasonable to think that we might end up getting some sort of rally. But you can see that we're staying above the moving average, really important for the bulls. So if we can get in, an open gap somewhere up here, then maybe we can start some sort of good-looking bull trend. But this needs to get a bit stronger. We do have an open body gap here, which is important for the bulls, but we probably need an actual gap as well. See what we get here. Again, it's not looking overly promising for the bulls, but nothing to sell. It still was a wedge on bar 8, so it's possible we need to get another leg sideways to down before we rally, if we do rally. What if 10 is a bear bar closing near its low? Well, it would be a second entry short, but possibly some sort of second leg down as well, because we went down on 9 and then up on 9, so that's one leg down. So if 10 closes on its low, that's theoretically the second leg down. So if 10 can close on its low here, some traders might sell, taking a chance we get a swing down. So, theoretically, you could sell 10. It's a swing trade, and you're betting we've seen the high of the day, but I don't really think it's all that great. You might be selling towards the middle of the trading range, and we haven't had a close below the moving average yet today. So if you did take the sell on 10, 11, you want 11 to be a pretty fantastic bear bar. I think if you sell 11 and you use a stop, well, if you sell 11, you should sell small. Sorry, 10, not 11. If you sell 10, you should sell small. You can put a stop maybe somewhere up here. And we're probably going to go up into this area. So you can sell more if we go up here. And you're probably going to be able to at least avoid a loss. Question becomes, are bears going to scalp, right? So we're probably going to touch the moving average. Bulls are giving up on the idea of us not touching the moving average. The question is, that's a 2-point scalp. So the bears who sold below 10 were now able to make a 2-point scalp. Is scalping for 2 points reasonable? Well, the range is 10 points and the bars 2, 3, 4 points. So it's probably the smallest size that's semi-reasonable. 2 points. I think 3 points is probably a better scalp on a day like today. 4 points might be getting a little bit out of scalp territory, and probably like, I don't know, 8 to 10 points on a smaller day is reasonable for a swing trade. But we'll have to see what we get. We have been getting smaller bars. You can see some bears did scalp with 2 points, and that's why we bounced there. 11 closes on its low. It's a possible high of the day, but then you'd be selling a big bar with big risk. We're reasonably low in the trading range. I'm not overly bullish on the day, but it's kind of hard to want to sell too much here. So I think 10 is a good example of, if you get the quick profit, it's okay to just take part off at 4 points. You were able to make 4 points. So I thought that's a more reasonable scalp than 2 for sure. But you can see on bar 10, the bear sold. They initially scalped with 2 points. They pulled back. Some traders sold again, and then they scalped again with 4 points. Why are they scalping with 4 points? Because it's not, it wasn't an incredible swing trade. So a lot of times traders convert swing trades into scalps, and if you get a quick 4 points, they'll just take it. When we were down here, we were 2.5 minutes into the bar, and so a lot of traders are okay with just taking their profit. Some traders will do. Let's say you sold, I don't know, two minis. You would scalp maybe one mini at the 4 point area, and then you would hold the rest to see if we get a swing. And if 11 is a disappointing bar, you can just exit, or you can look to scale in higher. Trade management is the actual important thing, uh, rather than the actual trades you take. Obviously the trades you take are important, but if you took you could take any entry on the chart, um, and 90% of the time you're going to be able to avoid a loss if you're really, really, really good at managing your trade. And so if you were sitting in front of your computer and you took, you had Al sitting over your shoulder and he didn't say anything and he let you take the entry you're going to take. And the moment you took that entry, he would take over. He could basically avoid a loss on like every single trade. He could find a way to scale in properly because he's so good at trading and he understands everything that's going on at all times. So someone with that level of experience, they can take whatever entries they want. Brad in his review the other day was talking about some entries that he took, and they weren't like the entries weren't amazing, but he's just so good at managing them that it doesn't matter. I mean, your confidence got to be through the roof at that point. Kind of looking for the day. It was this day, so he mentioned he bought below three, which I mean, I'm not one to judge Brad's entry. He's much smarter than me. But he bought below three, scaled in, made money. And then he bought the close of nine, probably more of a buy climax, but bought the close, didn't exit. He said he made a mistake not scalping out somewhere up in here, but then just scaled in, didn't panic, made money, or avoided a loss on the first entry, made money on the second. Bought below 18, made money. So he had mentioned, a whole bunch of times in here that he was scalping back and forth and making money. And he wasn't really even taking great buy the close, sell the close entries, but he was just managing them properly. And that's kind of the whole thing. So 11, probably sellers above if we get there. The bulls are hoping this is a bull channel. We're getting higher lows and higher highs. They're hoping we get some sort of bull channel. But I don't know if it's all that great or all that likely. Bull channel is pretty weak. So reasonable to be short, reasonable to be holding a short, taking a chance we've seen the high of the day. We're probably going to get some sort of minor reversal, trying to trap bears out if we go down. So before we go down, we're probably going to get some sort of minor reversal. What kind of correction should you be expecting on the daily chart? A higher time frame. Oops, that's the weekly chart. I don't know. I mean, it's reasonable to think that we're going to test back into this area around this high. That's 2%. 2% is usually an area where traders will start to buy. So I wouldn't be surprised if we got a 2% correction whenever this pullback starts. 5% would be down here. And that's not, it would be overly surprising. I don't think we're going to go all the way back down here. That would be 10 to 12%. I don't think we're going to do that immediately. But again, I don't think we're done with the number 5,000. I think we're going back to 5,000 at some point. Is it possible that it's just going up higher to set up a 20% correction? Because if you go to 6,000 and then you pull back to 5,000, it's 20%. And that's not a coincidence. So it's very possible that we go up to 6,000 and then we get a 20% correction down to 5,000. Do I think that's going to happen this year? No, I don't think we're going back to 5,000 this year. But there's just no way that we blow through 5,000 and test it one time. I mean, I've mentioned this before, but 4,000 we oscillated around it for a year. Okay, that's reasonable. 3,000 we oscillated around it, and 5,000 there's just no way that we raced up through it and just basically touched it, and now we're just going to pull away from it forever. We're going back to 5,000. I don't know when. Like I said, I wouldn't be surprised at all. Again, 6,000 and then a 20% correction makes a lot of sense to me. Corrections are inevitable, but they're also, really difficult to time a lot of the times. So, because the shorting the stock market on higher time frames is, theoretically an inevitably losing game because the market will always go up over time. So it's not as relevant on a 5 minute chart. You're not going to be worrying about that on a 5 minute chart. Um, but if you're trading monthly charts, yeah, it's really difficult. You probably don't want to be shorting the market very often based off the monthly chart. So consecutive bear bars, 11, 12, but 12 big tail, 11 big tail. So probably not a major trend reversal. I think the context is good for us to go down. So we might, but the bars are mildly disappointing. I wouldn't be surprised at all if 13 is a bull bar and it tries to trap out the bears who were selling below 10, tries to trap them out of a good trade. So I think, for the most part, regardless of what 13 looks like, if you sold below 10, you don't exit above 13. You just sit, stop above 8. Al says about 60% of the time when the market um, when the market starts the opening swing, it'll try to trap you out. It'll give you a bull bar that'll make you unsure of your life if it's a bear swing and vice versa. This whole tight trading range is possibly a final flag from the bull trend, so probably gonna have to get back into this area. Daily range is really small so far. So again, I personally think that 13 is going to be a bull close, just on the basis that the market normally tries to trap out traders who took a good trade. So I think that's probably what this is going to do. I still think 12 probably made us always in short, so I think we're always in short. And I think 13 would be a minor reversal. There's also the fact we had support here, so this higher low and then bull bar or buyers here, buyers here. If we get down to the 78 low, there's going to be buyers there. So there you go, 13, right? Bull bar. You exit above 13? I would not. I think if you're short, you kind of regardless of where you're short, you can probably just keep your stop, go for a swing. But this is why a lot of traders scalp, right? A lot of the traders who sold below 10, they scalped that with 4 points. I think we might get a second. It's very possible we get a second attempt at a reversal up too, but it's not worth exiting above 13 if you sold. So some bears, let's say they sold 10, they scalped a piece, and they see 12, 13, and they think to themselves, well, it might be a trading range. I don't really want to hold. And they'll just scalp out with 4 points around the bar 12 close during bar 14. So what if we get consecutive bull bars here? Would you exit? I still probably wouldn't. I still think it's a minor reversal. I think it's probably okay to just let your stop get hit if we trade above uh, bar 8 here. If you're short, I think some bears might sell the bar 10 low since it's the swing point. So I think if we get to here, they'll probably be sellers, and they're going to try and form a lower high from the sell off down. So if I was short right now, I would have scalped a piece, I think, and then the rest I would basically have my eyes closed and take a chance. So you can see it doesn't look like it's going to be a very strong close. Probably buyers below 14 initially. The bears see a low one short in their bear trend, and they're hoping we're going to start to sell off. So consecutive bull bars, we might get two legs sideways up. It's but it's still a minor reversal. I'm not expecting a major reversal here. I'm probably expecting a lower high. On a completely unrelated note, the I got a new personal record on my Rubik's cube. I got 21 seconds the other day. I was looking into it's a to go from like 40 seconds to 20, 20, 21 seconds. You have to learn like two or three, maybe like four algorithms. So it's like it's a little bit difficult, but it's not that hard. So I was looking into like the next steps to down the rabbit hole to see how I could do it even faster, and to go from like 20 seconds to like 13 seconds, 14 seconds, you have to memorize like 65 algorithms. So I don't know if I'm going to do that. It was a lot of work. It's difficult. It was difficult to memorize the four that I memorized. So I think memorizing 60 is a lot. Every Rubik's Cube can be solved in 20 moves or less, which is something that I didn't know until probably like 6 months ago. But it's pretty fascinating that, there's like quadrillions of combinations and all of them can be solved in uh, 20 moves or less. I also have a mirror cube. If you don't know what that is, you should Google it. It's like a shape cube. It's pretty fun, but those are it's the same process, but it's just a little bit more difficult because you're solving shapes instead of colors. But I don't know. It's a puzzle. The Rubik's cube is a puzzle, and the stock market's a puzzle. So it's just kind of scratches the same itch, I think. I still think minor reversal here. If we get a bear bar closing near its low on 15, can you sell it? You can, but your stop is still above 8. You're not selling below 15 with a stop below 15 or stop above 15. Still a lot of time left in this bar, though, so we'll see what ends up happening. 13 on the moving average, after a decent sell climax. Bulls want double bottom, 313, measured move up. I don't think that's going to happen. And I think that the traders who buy above 13 were taking a low probability trade, so I think they're going to lose money. So I do think we're going to go below the 13 low. So we traded below 14, and 14 is the low one short for the Bears now since we traded below it. Probably, like I mentioned, buyers below 14 since bull bar, possible bottom of trading range, but I still think we're always in short, probably going lower. So buyers below, but it's a scalp, right? Traders are buying below. And I don't know, 2 points is probably reasonable to be honest. It's still a pretty small day. It's like the minimum scalp is 2 points, but this is pretty much a minimum trade. It's not, if you're buying below 14, you're doing it for a quick move. And if you don't get it, you get out. So a lot of those traders are just going to take a quick 2 point profit. If 16 is a big bear bar closing near its low, well, it's possible. You could sell it, but we're probably going to get a small second leg sideways stop. I think. So if this closes on its low, you can sell it. I'd probably still put my stop. You know, you're not going to let it get hit, but you can probably put your stop below 8. At this point, I still think we might get a second attempt to the upside. It gets difficult, I think, if we trade below bar 13 and then get another reversal up, because that would be a little bit of a more credible reversal, and it's a possible wedge, 1, 2, and if we get below at 3, versus the bears want to see more of a two-legged correction and then a bear bar closing near flow. So we're trading below. It's, still a possible wedge, a couple ways to draw it. 1, 2, 3. I think that's the most credible right now. You could say 1, 2, and then 3, but bad shape. So important close here. If we close below the low of bar 13, it's possible we're getting to break up now on bar 16. And the bears would be hoping that bar 17 is another bear bar closing near its low, and bar 18 is another bear bar closing near its low. This is kind of the issue. 17 closes on its high. It's a possible wedge, 9, 12, 17. Less, worse shape, but 5, 11, or 5, 12, 17 is also a possible wedge, just an overshoot. And you can see where we tested to. Where did we find support? The open of bar 78, the buy climax low. So it's not surprising. Again, these are going to be support. These are going to be support. Maybe the 61 high is going to be support. But there's less support down here than there is in this area. That's the problem. When you look to the left and you see tight trading range, it's a little bit more difficult to be taking trades. So am I buying above 17? Well, I would exit shorts above 17 for sure, assuming it closes on its high. But it's big bar, big risk is the issue. So we're probably going to get a pullback. So I would not buy, or I might buy above 17 close. It's just such a big bar. The risk is so big. You're taking a chance we started to swing up. It's now an outside bar. So I think traders are probably going to be more interested in buying a 50% pullback. I might look to buy like a breakout pullback or something along those lines. So disappointing close on 17. You exit above 17. I mean, probably don't have to. It's still a wedge though, so you're still expecting two legs sideways to up. And this is obviously not, you didn't want to see that surprise. So Can you probably just sit in the trade and still take a chance? We've seen the high of the day. Yeah, I think you can probably do that, but it's just a difficult decision. It's probably one of the reasons why it's better to scalp in trading ranges because you just gave up. Let's say you exit, you just gave up like 8 points of profit. So it's one of the reasons it's more comfortable to just scalp a piece. Pretty tight trading range on the open thus far. So not much to do here. If it's a bear bar closing near its low, could you sell? Maybe in theory, but it's probably a third push down in the trading range. First leg down to 12, second leg down 15, 16. And then after 17, you're getting a second leg sideways to up. That's a big enough surprise. You should expect it. So difficult. So kind of interesting, right? If we get an inside bar here, it's an IOI pattern. And you can buy above 18 in theory for a swing, but the issue is big bar, big risk, and it's asking you to buy basically the exact middle of the trading range. So it does not close on its high. It's still an IOI pattern. It's probably okay to get out of shorts above 18. There's going to be buyers below 18 because 17, 18 strong enough surprise for a second leg sideways to up. So you do have to keep that in mind. So expect buyers below 18, second leg up, 17, 18. Maybe, I don't know if they'll buy immediately below 18. The reality is we're going to get back to the 16 close. Traders might try to buy like a point below 18, might be a better trade. So like somewhere like in this range, maybe, logically, a 50% pullback is probably a good limit order trade. And it's probably going to be about a point below the 18 low. So right here, 88.75, and this low is 89.75. So a 50% pullback is 1 point below. Whether you decide to buy because it's 1 point below 18 or because it's a 50% pullback, it doesn't matter. It's a reasonable thing to do. You're buying for a second like up. So we'll see if we get below 18. Do you buy above 18? I don't know. I mean, I think I would probably rather wait. Do you buy above 19? Again, another kind of difficult spot. Probably better to wait for a pullback. 10 is the only credible stop order, I think, so far today. At least the only reasonably good one. So, three straight bull bars, probably buyers below 19 if we get there for a second leg sideways to up. But it's not going to be. It's not going to be a major reversal, still a minor reversal. Bears are hoping this was their breakout, and then one, pullback two. Now we're getting trend resumption. But after three straight bull bars, 17, 18, 19, tough to want to be short here, but difficult to buy as well. So really not too much to do here. What am I looking for the rest of the day? Well, if it's going to stay a trading range day like this, then I'm not really that worried about doing very much. Maybe buying a reversal up from low, selling a reversal down from high. I'm looking for 5 points. Probably best to be flat. Trading ranges tend to spend most of the time in the middle of the range, and it looks like we are spending time in the middle of the range right now. The risk is large for the bulls, which makes it not quite as good. Going to be buyers below 20. I don't know if they're stepping in here or they'll step in around 50%, but it's definitely, okay to buy below 20 or buy at a 50% pullback. You could buy below the 18 low, thinking it's the bottom of the channel. So spike, pullback, channel, 18, 19, 20. You can buy down here. So you got to be willing to scale in probably, but I would imagine it's going to be a pretty painless limit order trade for at least 2 points. If you hold, maybe you'll get four. Probably get four if you hold. But if you're going to hold, you also have to be willing to scale in. So it's kind of a, what are you willing to do? So what do we have, right? The bulls are hoping that 17 through 20 is the start of a bull trend, and this is a breakout pullback, and that we're going to get some sort of a bull bar and a measured move up. The bears are hoping that 21 is a bear bar closing near its low, which would scare the bulls out of their longs from 17 through 20, and that will start to sell off. If 21 is a bear bar closing near its low, it's not really a very good sell. There's going to be support at the bar 16 close, and there's going to be support at the bar 17 or 17 low. Yeah. So a lot of support around the 17 low and 16 close. So even if we do go down, we're probably not going very far down. So there's probably going to be buyers. If anything, if 21 closes on its low, it's going to be more of a buy the close bar than a sell the close bar. So it's not really worth doing anything unless you're long. You can be long, I think, for sure. I probably wouldn't be short. Bears are hoping head and shoulders top, maybe. It's that shape, but So what if, so obviously bulls are buying. What if 22 is a bull inside bar closing near its high? It's possible double bottom, neckline 19 high, but I don't know how much higher we're really going to go. So I think you can be long for a scalp. This by the way right here is a perfect example of the problem with limit order trades in that you'll win a lot of them, but you can get into tricky situations where you get bear bars closing near its low. If you're not experienced enough to be trading limit orders, these can scare you out of trades. This is why I don't take limit order trades because I would be a little bit nervous right now if I had bought on a limit order and I'd probably do something dumb. But that is assuming 21 closes on its low. I don't think it's going to close on its low, but if it did close on its low, it's very possible I would end up doing something dumb had I been long. So it's a bit tricky. But the reality is we're probably going back to the bar 20 low, even if this bear bar does close on its low. You can see we got to around the bar 16 close and bears bought back shorts. When you get a trading range day like this, one of the really key things to remember is that there's usually a breakout attempt around bar 30. So you have to keep that in mind. What if 22 is a bear bar closing on its low? It's possible that we've started to move down, but possible wedge 317, and then it would be 22. So I don't think it's all that great. It's also not quite close enough to the bar 30 window where I think we'd be getting a breakout. And if we get below here, we're in this area. So it's really not as good as it could be. And your sell signal bar would be the bar 20 low. Now, it's good for the bears that, let's say, we collapse down. We would have an open gap with this. We would even have an open gap with this, the 18 low. So all those bulls would be trapped. But that's making the assumption that 22 ends up becoming a giant bear bar closing near its low. And I don't really think that's going to happen. But even if it does, those bulls will probably still be able to get out. This doesn't look like a bear trend. It looks like a leg in a trading range. So if it is a leg in a trading range, I'm a lot less interested in selling. I'm a lot more interested in looking to buy a small reversal up. So it looks like going to be something disappointing for the Bears. Probably going to close those little gaps that, they're not gaps yet, but had they remained open, they would be gaps, but it doesn't look like they're going to. Let's see. I imagine we're going to trade up at least another tick here. Or I imagine we're at least going to get to the bar 20 low. Okay, there it is. So do you buy above 22? It's probably an okay swing trade. Higher low double bottom. You could argue if this is a bear trend, we have a trend line break and higher low major trend reversal, but it's not a major trend. So if you're getting a higher low major trend reversal and the bear trend is only 8 bars, it's really not all that great. So it's possible if you think about it. This whole wedge, 1, 2, 3. Now we get a pullback. 1, pullback 2. Now we're getting a reversal up maybe for 2 legs. The wedge was, I don't know, 13, 14 bars. Correction seems to be 7 bars from here to here, and the wedge from here to here. So about half the amount of bars, which is reasonable. Problem with 22 is you'll be buying on a flat moving average, and you're going to be buying closer. It seems like it's lower in the trading range. It kind of feels that way. But if you just objectively draw the thing out, you're buying a flat moving average basically in the middle of the trading range. So how eager are you to do that? Probably not very. The Bulls, maybe they bought the 20 low. They bought more around the 16 close or the 17 low. Maybe they added below 21. And they're probably scalping out right here. So the Bears are hoping that, this is their bear trend and that we have a wedge pullback, maybe 1, pullback 2, pullback 3. They're hoping it's a wedge, but it's not really that great. We keep getting a lot of bull bars. We've had, it's going to be 5 of the last 6 bars are going to be bull bars. But the Bulls, again, hoping higher low major trend reversal, but you're buying right on a flat moving average. 22 has a tail. So really not all that great in the middle of a trading range. Remember, most trading ranges spend most of their time in the middle of the range. So I think we're probably going to spend a lot of time in the middle of the range here. And if we get a brief sell-off and then a bull bar closing near its high, near the low of the trading range, that's a reasonable buy. And a brief rally and a bear bar closing near its low, top of the trading range, that's reasonable as well. Where is the bottom of the trading range? Well, today's range, it's pretty clear we're getting support. It's possible bar 78 was the start of the trading range. So maybe we get all the way down here and we form a trading range like this. Sorry, let me zoom in a little bit. Trading range like this. It's possible that the trading range starts here. So maybe it started on bar 29. So maybe we form a trading range like this, or it could be all the way down here and we could form a much larger trading range, but I don't really know if we're going to do that. What if 23 is a bear bar closing near its low? I would not sell it. I think we're probably going to rally back to the bar 20 close at some point. So it's really not that great. Again, the Bears are hoping this is a, three-legged pullback, 1, pullback 2, pullback 3, and then bear bar closing near its low, a swing short, but you're selling the bottom of a trading range and your risk you'll probably have to put a stop above 19. So it's really big risk and not that good of reward. So I would not be willing to short. All right, I'm probably going to wrap up this video. There will be a daily review today, so everything is back to the normal schedule, and there should be one of these tomorrow. So, all right, that's it.